Let us begin with the simple question. What is a self-employment tax? Well, this is a tax that a self-employed taxpayers deposit into the Social Security system. Self-Employment Contributions Act, SECA, requires individuals who earn income directly from their business activities rather than as employees to contribute to Social Security and Medicare. Self-employment tax is calculated as a percentage of net earnings from self-employment. Who can't afford to ignore self-employment tax? Here's a list of 4 types of persons who must pay self-employment tax. 1. Sole proprietors and independent contractors. Individuals operating their businesses or offering services as sole proprietors or independent contractors are required to pay self-employment tax on their net earnings if they exceed $400 in a tax year. 2. Partners in a partnership. Members of a partnership that conducts a trade or business are subject to self-employment tax on their share of the partnership's income. 3. Members of a limited liability company, LLC. Depending on the election made by the LLC, members may be treated as sole proprietors or partners for tax purposes and thus be required to pay self-employment tax on their share of the LLC's profits. 4. Clerics. A cleric is required to pay self-employment tax on income from services as a minister unless the individual has taken a vow of poverty. Who is exempt from paying self-employment tax? There are at least 10 types of persons who are exempt from paying the self-employment tax. These are: 1. Individuals who work as employees and receive a W-2 form are not subject to self-employment tax on their wages, as their employers withhold Social Security and Medicare taxes throughout the year that the employer pays over to the government. 2. People who earn rental income are not subject to self-employment tax unless the individual is engaged in a rental business that provides services for the convenience of tenants. 3. Limited partners in a partnership may be exempt from self-employment tax on certain income distributions, as their involvement in the business is typically passive. 4. Certain business owners, including S corporations, may not be subject to self-employment tax on their share of the corporation's profits, though they must pay themselves reasonable compensation subject to the FECA employment taxes. 5. Commissions allowed by the probate court under local law generally aren't considered self-employment earnings. 6. Termination payments of former insurance salespeople for the company if certain conditions are met. 7. Ministers, Christian Science practitioners, and members of religious orders who have taken a vow of poverty may get an exemption from self-employment tax on their earnings if certain requirements are met. 8. The fees for the services of a notary public are exempt from the self-employment tax. 9. Non-resident aliens engaged in a trade or business within the United States may be subject to self-employment tax, with specific exemptions based on tax treaties. And miscellaneous income from an occasional act or transaction. Isn't income from self-employment subject to the self-employment tax? Is self-employment tax deductible? Yes. Self-employed individuals can deduct half of their self-employment tax when calculating their adjusted gross income, providing some relief. Do farmers pay self-employment tax? Farmers are subject to special rules for self-employment tax, with different thresholds and rates applying to their net earnings. Farmers have a unique option to average their current year's farm income over the previous 3 years. This special provision, known as income averaging, indirectly lower the self-employment tax. Brought to you by itstaxapp.com. If you liked the video, please share, subscribe, and like it.